We have a filing from Klarna, the Swedish buy now, pay later giant, a venture capital darling, Jason, saw its valuation spike during COVID, came crashing back down to earth.
We did have a concern that the buy now, pay later economy was kind of like a gray market and it was underreported. So we have all this credit card debt. Now, credit card debt has hit some all-time highs. And then we didn't know if this was adding like another 10% to debt. But, that is always the concern. And, I teed off on one of them, I think maybe Affirm, when they had buy now, pay later at the grocery store, which I felt was like, I don't think we should be offering that.
It makes me sad that we would need an installment plan for regular consumers to purchase basic fundamentals. At the same time, we have seen quite a lot of grocery store inflation lately in the last couple of years, so I kind of get it, but that makes me sad. But I do think that if you are offering people a reasonable, low fee, low interest rate way to access goods, I'm not going to complain about that.
Well, but the interest rate, though, I looked it up because I've not used Klarna. Interest rates ranging from 0% to 33.99%. So like that, once you're getting into the mid-30s range, it's a little usurious. Like all I know anecdotally, there is, I like that show Financial Audit, that Caleb Hammer YouTube show where he has people on who've gotten themselves into serious debt and he helps them get out of it. Klarna comes up all the time. Like that, it's a very frequent brand that you will hear people who have a lot of debt, who get themselves into debt trouble. They like these kinds of buy now, pay later. It's not quite, I'm not suggesting it's like up to it's not like a payday loan where it's like straight up a scammy thing that's trying to take advantage of people.
Right.
But I do think it's like right in the start of that gray area.
Yeah, you're getting into loan shark. That VIG's way too much.
Exactly.
Yeah, I think it's no bueno. When I bought my new Mac, it was like, I was going to buy a new iPad or something and replace the other one. And it was like, would you like to pay like whatever over 2 years or 4 payments? And it was no interest. And I like when it's abstracted and it's on the side of the retailer and they're taking it out of their cut. So I did see one of the Teslas now, it might be the Model 3. One of you can look it up if you go to the website. They're offering like 0 APR. And I was like, how's that possible? And it's like, I think they're eating the interest in order to move cars. If it's done on the side of, in a high interest rate environment, it's kind of a win for consumers to pay over 4 because if you have money in the market, you would be making money. But I guess this is going to a class of people. Maybe we don't have that.
I was about to say,
they set the interest rate based on your credit score. So it's another one of those, like, it's more expensive to be poor. Like, if you've got a great credit score, you could probably get in a lower interest rate. If you've got a bad credit score, meaning you need Klarna services more, that's when they're really going to nail you.
Who's gonna get like a big hit out of this? I know Sequoia was like the original investor and Michael Moritz was on the board.
Yeah. So Sequoia is the largest outside shareholder mentioned in the filing, 8 million shares. This company, Jason, has raised a lot of money over time, and its investors aren't showing up in the 5% and above threshold, apart from Sequoia mostly. So I'm curious if they didn't buy as much as we thought, or if there's been more secondary transactions reducing external stakes over time. But this is going to be a big win, probably, for at least Sequoia.
I think this company also had some challenges along the way. Who knows if they had a down round, flat round, or some other things occur. Those down rounds can be brutal. That's the big founder lesson here. And the other big founder lesson is sell as you go. So I hope the founders sold at those incredibly high valuations, 10% or 20% of their holdings. Always my best advice is to sell 10%. When you get to that $500 million, 250 million, 500 million. If somebody owned 40% as a co-founder, it's not going to change your life to go to 36% and then go to, whatever it is, 32% if you sell 10% twice. And it will put a floor in and protect you and your family and get you diversified.
But Jason, we have talked so much on this show about companies doing more with less, using AI for automation, and Klarna has been a poster child of that. So the thing that I was really curious is how much money did they spend less than before? And in 2022, sales and marketing costs, $531 million. In 2023, $381. And last year, when growth reaccelerated at the company, $328 million. So consistently more efficient. And that to me is the story here. You guys are right. Usury is dickish. Fair enough. But from a purely capitalistic perspective, there's a lot to like in this Klarna F1. And now I feel like a supervillain. Lon, What are you doing here making me feel guilty?
Listen, I'm not, listen, I'm not saying like people need loans, like people like their service. I'm not trying to say it's a bad company or anything, but it does. That interest rate gives me pause.
What is this? This week in generosity? No, sir. This is this week in capitalism.